Well, it's time now for business. Kate Moody joins me here in studio. Kate, a big shift on the way for Chinese companies whose shares trade in the US.
Yeah, we're seeing new regulations coming in on both sides, in both the United States and China, and that's really turning up the pressure. We're already seeing some signs of change. On Friday, the Chinese ride-hailing app Didi announced plans to take its shares off the New York Stock Exchange and move exclusively to Hong Kong. Didi made a rather disappointing debut on Wall Street in July. It has since been removed from Chinese app stores. It's also cancelled plans to start trading in London. Now, last week, American regulators said that they were going to be pushing ahead with plans that could see foreign companies kicked off U.S. markets in the next 3 years if they don't comply with requests for information or audits. On the Chinese side, Beijing is continuing a crackdown on tech companies by preparing new rules that would make it more expensive and difficult for domestic companies to list their shares elsewhere. Over 200 Chinese firms trade on America's 3 largest exchanges. Combined, they're worth over $2 trillion. So a large-scale delisting could have a huge impact. 3 major telecom carriers have already been delisted from the New York Stock Exchange this year because of Trump-era rules on American investment in Chinese companies. Alibaba, JD.com, and Baidu are among the tech giants which trade in both the US and Hong Kong. The tightening screws and this shock move by Didi saw Chinese companies shed as much as $99 billion in market capitalization on Friday alone. Meanwhile, the troubled Chinese property developer EVERGRANDE is once again on the verge of collapse. A 30-day grace period for interest payments worth over $82 million is coming to an end this Monday. EVERGRANDE has warned it could not guarantee payment. The real estate firm has more than $300 billion in total debt. Shares in Hong Kong plunged around 20% on Monday to a new record low. They've already dropped nearly 90% since the start of this year. Separately, the Chinese government is trying to stimulate its slowing economy. The People's Bank of China says it will reduce the reserve requirement ratio, which is the amount of cash that banks have to hold as reserves. It'll be the second such move this year. It'll take effect on the 15th of December. The idea is to boost business by releasing more liquidity into the economy. Let's check in on the day's trading action now. The major European indices closed higher. We saw gains of around or just under 1.5 percentage points there across the board. This despite renewed uncertainty from European consumers and investors alike. Wall Street is also rallying. The Dow Jones surging over 2% this hour. The tech-heavy Nasdaq's lagging slightly behind there, up 1.2% this hour. The value of Bitcoin, meanwhile, has lost just under $10,000 since Friday. Cryptocurrency trading at around $49,000. Europe's tourism industry is still hoping for a strong holiday season, despite the tightening restrictions linked to the Omicron variant of COVID-19. French ski resorts were virtually shut down last year. They're now reopening with strict health measures in place. Solange Mougin has more.
Gliding into the holidays. Many of France's ski resorts have opened for the season, but with a slew of new COVID rules. A health pass is now required to hit the slopes, as are masks and chairlifts. But for many skiers, these are just quick formalities before hitting the powder.
We adapt. We don't have a choice if we want to go ahead.
It's easy. Once it's done, and then you can enjoy.
Last year, France's ski industry was largely shut down because of the coronavirus, creating billions in losses for the sector. This led to a €5.4 billion government aid package. So this season there's joy at these reopenings. Reservations are jumping. They're up 80% here in the Alpe d'Huez. So there's hope, but there's also trepidation.
We know that at any moment everything can stop. We're confident, or relatively so. We know there will be surely fewer foreigners. We hope there will be more French people who stay and go on vacation here in France.
For those dreaming of sunshine on the other side of the globe, travelling abroad is becoming increasingly tricky out of fear of the Omicron variant. Changing travel restrictions have pushed many to give up on the idea of flying far.
We're staying in France. Going abroad isn't for this year. We're being careful.
It seems complicated to go abroad.
But what is airlines' loss may be trains' gain. Reservations for rail tickets within France have jumped, with some 3 million of them being sold for the holidays. That's more than pre-COVID levels. Another big winner, vacation rentals. Some 80% of France's for-hire holiday homes have been snapped up for this New Year break.
That's all for now, Sharon.